Okay, hi there, traders, and welcome to Trade the Structure, the morning jumpstart, where we can take a look at the action from overnight and yesterday's Asian market action and just see where that places us for today. We're coming into the Asian market session just to see the levels and what action we could expect today. Now, if you're trading the ASX, just remember we've got RBA interest rates at 230, which look, they're going to raise it from potentially 0.1 to 0.25%, which is next to nothing when they probably should have raised it a lot more than that. But they don't want to rock the boat before the election. So it looks like we're going to lag, a bit like the US. The US should have really raised by now. I mean, their inflation is sitting at 7%, I think, or so. We're at around 5. So, I mean, when you've got a target of 2 to 3%, and you let it run a lot higher, yeah, it's just putting pressure across the board onto retail and to consumers, basically. So that's going to be the action. I think it's going to be a bit choppy. It'll be more about what he's going to say in the statement. And the same with the US when the FOMC comes out on Thursday. It's more about what the statement says. Are they going to start to get aggressive, or are they just going to stick with the same sort of rhetoric? So anyway, this is the US. But the US had a massive rally. So that there on the Dow was about 500 and something points, 550 points. So close, not far off 2% rally from the lows in the last hour of trade. So it looks like either algos worked off those lows, went into overdrive, coming to that last close, just to squeeze out some of those sellers. And it looks like more people are interested in trading intraday than sort of your longer term. I think as we go into an interest rate rising cycle, technically or traditionally, that's not really good for equities, and especially the fact that we've been up at these all-time highs. But the problem is, and like I said, they're not too confident what it was not so much the RBA, but the FOMC, what they're going to do, the Fed Reserve, because they have been holding off for so long. Why would you be closing out your long positions if you're not sure whether they're actually going to, come to the party and start to really grab inflation by the throat? So really, it's sort of those markets have been talking down because of inflation, but they're not really doing anything. The Fed, so people have been getting back into longs. Now I think they're sort of in that mood where they're just holding off. Bit of risk off the other night, on Friday night, but for now it looks like it's more intraday action than anything else, your longer term action. So I'll be interested to see whether this can actually work its way back up through 33,165, or whether we just sort of drift lower coming to the start of the US session. Now over to the US tech, that has pushed down through that 13,025 zone. But that action from overnight was really choppy. You can see that they were trying to buoy that earlier than the close. I mean, this was the open. So the open was a bit of a pump up into the open because of what happened on Friday night. Big sell off on Friday night. Monday they're coming in some bargain hunters, some more selling up until about the last hour where we got ramped back up again. So you can see that action is choppy and it's supportive. They're trying to support it below that level. I don't really see too much. We might just pop over to we'll just get over here and just look at the action on the Nasdaq on the actual underlying index, and you can see that rally, 2.7% rally off the lows, but it has broken a key level. It's just whether or not they're trying to bounce back. 13,125, that key level at the moment. The market is definitely heading south, and that's the extension level. So you got the first sort of leg down. We had a good retracement here, and the secondary leg down. So I'm betting that longer term we're still heading down to sort of that 11,600 area. We might just be retesting this support after the break just from beneath and see if we can just drift over from there. We may flush it. If we start to pump too much higher and push back up to the level, you're sort of looking for a retest from above. Okay, and resistance now becomes support again. Okay, but we'll wait and see how that plays out. I think with the interest rate rising cycle, it should be putting more pressure on equities. It's just that uncertainty coming into the start of the US session and that start of the rate rising cycle. So FOMC Thursday, that's what I'm trying to say. We'll get over to the Asian markets. Actually, we'll get onto European. We'll stick with that theme. Now, this is the DAX that was open, and the UK 100, which we'll show in a second, was closed. So I wouldn't be reading too much into that, but you can see that level there held up nicely, 13,830. You got the market pressed into it a couple of times now, and it reacted up and off that level again last night, even though it was down. Okay, so the DAX was down. It could have been a lot worse. I mean, if you look at the Dow, the Dow was down about 500 points at one stage and ended up slightly green, about 30 or 40 points in the green. So it did retrace all the losses, which would have been another big loss on the back of that 900-point sell-off on Friday. But yeah, they got reversed and into the close, which helped out on the DAX as well to find this support. So that support's holding. The thing is, we've got a lower high. It is confirmed. So you got this move down. Support's holding. We've got this lower high also confirmed at 14,030. So really, I would expect this market. I mean, there's still a couple of sessions to go before FOMC, but I would expect this market potentially be range bound, or at least if it's not capped at 13,030, capped at 14,155 until we hear more about what the US does with interest rates or what they're going to do with interest rates. Okay, a rate rise has been factored in, but it's just how much. And the same with Australia. And I think for the RBA, the bonds on Aussie bonds they factored in only the 0.15, and they were actually factoring in a lot more, and they started to back off a bit. So it's interesting to see whether the bond market, what the bond market thinks. I think some numbers come out in the US weren't too solid, manufacturing numbers, and we got Chinese numbers come out on factory numbers were a lot weaker than expected because of their COVID, not because of their lockdowns. Okay, so that's probably going to weigh on the rate rising enthusiasts. Looking to raise rates a lot more than expected, especially with the RBA. So it's probably taken a bit of heat out of that because of those numbers. But realistically, when they get it under control, it's going to kick back in again, and we should be, looking at rate rises a bit more than what they're giving us. Okay. So that's the DAX there. We'll just look at the UK. That's sort of what we were talking about yesterday, a bit of a bounce back into 74.94. I would expect that kind of a bounce in there. I would expect that to hold. I would just be interested to see whether it can hold. But yeah, it's going to have to, because it was closed last night on the FTSE, closed last night, so they haven't really, and they were actually up on Friday slightly. Okay, so the underlying index was up slightly Friday when before the US got hammered. Now the CFD price, and that's pretty much after the hammering, and it has bounced back slightly. So last night when it was closed, so I would expect a potential push to retest that 74.94, and then we'll see if they can roll over from there. We get a big retracement. I'm biased more of a rollover. I think it's too much to ask for this market to keep going higher without some sort of profit taking. Over to Asian markets now. We'll start off with the Aussie. This is a SPY 200. Now that bounce hard, you can see that was about a 50-point rally. It's actually a 50-point rally to here. It's probably more likely, what's that? 50 to 60, 60 to 70-point rally off those lows. One foul swoop up, and that just squeezed out all those sellers. So it doesn't look too bad on the 5. I mean, we could easily get a lower high here and pressure down again. Okay, and I would expect more negative action before the RBA. Okay, before the statement. But this could easily get ramped up. I mean, they want to see it higher. I'm not saying they. I mean, they is kind of that. It's weird sort of a statement, but I think your bigger funds, they're expecting. If you're talking, you got to remember, if you're talking up rate rises, you're talking up a stronger economy. Okay, but I do feel over the since the pandemic lows, we've more than factored in that strong economy, more than factored in, especially in the US. It's gone gangbusters, especially when there's been nowhere else to put your funds. It's always been into equities because there's nowhere else really to park your money if you're going to invest, if you're wanting the yield. Same with Australia to some extent as well. So even though it is a strong economy and you're raising rates because of that stronger economy, it's already been factored in my opinion. And this sell-off, what we've seen off these all-time highs, is not really, I wouldn't expect a major move. But then again, it comes down to how much of a rate rising cycle can we expect? Are we going to get quite a few rate rises, or are they going to hold off? And it looks like already they're trying to hold off without, let inflation go a bit higher before they do anything about it. So maybe they're still thinking there's got a lot of transitory, what the Fed Reserve is saying, inflation's transitory, and maybe, it is. It's just taken a hell of a lot longer than what they expected. So they're letting inflation ride at higher levels, much higher levels than what they really should do. And I think the RBA is just following suit. So I would expect potentially after sort of bounce, a bit of a drift lower, maybe into 72.65, maybe a bit higher than that. But really, I would expect an uncertain market, and I'm not interested in trading it just yet. I've got the levels marked up, but that's more to see what happens after 2:30. Okay, but we'll see. But on the longer term picture, you can see this sort of move down into 7,300, that bounced to 73.66. We flushed 7,300 before we bounced, so I'm sort of looking that we could be testing back into there and holding a higher low, okay, and making a move back to 74.32. Probably not, not today, but over the next coming sessions or so, just depending on what happens in the US, because we do follow them a hell of a lot. Over to Hang Seng. Now that was closed yesterday. Big, and you see on Friday, if anyone was watching that Friday, big flush of key levels, okay? Not just one, but two key levels, and that was a massive rally, about 4%. from sort of this move right up to here, or 4.5%. Now that's a really, really big move, and that was just fueled by a hell of a lot of stops getting triggered. Okay, not just stops, but it was a key level on the underlying index, which would have triggered a lot of buyers into action. Okay, so it was all one-way action there. You go stops getting triggered, so that's buy stops. If anyone that's short getting triggered, maybe some buy stops getting into the market, and then your share traders all lifting in the same direction, lifting price higher. So it did run up into that 21,040, and it looks like we're just opening. Well, the CFD prices are opening. You don't take too much into account on that. The market opens at 11:15 Sydney time, so it'll be interesting to see what we do at 11:15. I'm going to let this sort of run a little bit longer because I want to see what key levels are going to work out or what's going to happen. There's a couple of days to make up. It didn't really do anything. It didn't do anything yesterday and overnight. So there's a bit to make up. There's a bit to factor in. So we want to see what the market wants to do. I would like to see sort of a flush through 26.90 just to drag in some shorts, expecting the squeeze of those longs before we bounce back and start to push back up to that 20.040 level. Okay, or somewhere up in that zone anyway. Japan, so that's closed today. It wasn't closed yesterday, but they're locked in between that 26.910 zone and that 26.590 area. Okay, we tested into there, rejected that level, pushed back up to the, with that big rally into the US, pushed straight back up to that 26.910 area and that zone before, sort of holding down now. Again, it could do anything because the market's not going to be open. So the CFD price, and if you're going to trade CFD, if it's not on TD 365 and it's on IG or anything, just be wary that you're not trading the underlying Nikkei. You're trading something else. It's going to be going off something else or just sentiment. So I'm steering clear of that intraday until it's back on. I think it's back on tomorrow. Anyway, okay, let's get over to some currencies now. We'll get over to US dollar, and US dollar pushed up. So it's what we were saying. Don't expect it to, we were trading with the currency. I think the US was trading around here. So it closed around here Friday, opened around this zone yesterday, and pushed back up. So don't expect a massive sell-off. It is extended, but it's into a key resistance area. So that US dollar will hold up until we find out what the FOMC is talking about in the statement with regards to interest rate rises, to inflation and that sort of stuff. So, and it also had a bit of a negative, I think the numbers that come out weren't too strong. So there's a bit of uncertainty. They've talked up being more aggressive towards inflation, but that's all talk. They also talked up that it's inflationary and transitory, which they were wrong. So it's really the market suggesting that doesn't want to do too much. It's going to be capped, I think, up towards that 83, 84 area, up towards these highs. It's going to be capped. So I'd expect it probably to drift a bit lower today, being that major resistance zone is just going to hang around there until FOMC, until the inflation numbers come out, I think Thursday evening. Okay, so I've got Tuesday, Wednesday to get through, so I expect more choppy, just sort of range bound up around this zone, maybe above 102.80 up to 103.80, okay, up to that area, just sort of chopping around in this zone. Now, what does that mean? Euro, we spoke about this yesterday, it's back down to some major support. So, it's had big sell-off into that major support. We had a bit of a retracement here. So it has broken that downtrend, and that's why I'm expecting more range band action. I don't expect this little pop here is going to lead to another big sell-off, okay, especially where that US dollar is. So if the US dollar is going to be capped, the euro is going to be supported on the downside. Okay, so if the US dollar starts to roll over tonight, expect a bit of a push up and squeeze out some of these sellers today. So that's what I'll be biased in. It could flush through these lows at 104.73, press down through the lows but bounce back. Okay, so I wouldn't expect any big sell-off, down through 104.50, for instance, to the lower end of this range, because I don't expect that US dollar to start pumping too much higher. Okay, if it's pumping higher, they're factoring in more rate rises, which I don't think is going to happen. Okay, especially because they had some relatively, disappointing inflationary numbers last night, or factory order numbers last night, ISM numbers. So the pound a bit like that. It's got buying into the US dollar, some support into the US dollar. We found some selling into the pound, but it's down. It's also broken this sort of anchor to the downtrend at 125.68. Excuse me. It recently broke that. It's heading lower, so it doesn't really want to go higher or lower, and it's probably going to be chopping around these zones, around this area until potentially Thursday night, unless something else happens. If there's a major meltdown into equities, you might get a safe haven bid into the US dollar, which means you're probably going to get some pressure to, say, the euro, the pound, the Aussie, and maybe not the yen, but we'll see how that yen goes in just a moment. So that's what I'm looking at there. You see momentum down is starting to fade, and it's fading, so that lower oversold zone, which would mean that you might get, if that selling pressure's starting to fade, you can get some buyers start stepping in just to squeeze out some of these sellers. Okay, and that would probably play in well to a bit of an ease into that US dollar rally. Okay, Aussie dollar, again, it's down into some key levels, some major levels. Sort of this one, was it, I would say 70 even levels, say 70 50, 70 30, 40 into that support there. You've had that big sell-off from 71.66. It's sold down, started to bounce back up. Not really bounce back up, but it has been finding some support. So you've got a minor, a double bottom, which you can potentially work off somewhere around 70.30. Okay, and if we start to get a higher low, some bids start to come in, they might try to look to squeeze out some of these sellers, especially coming into the RBA. But I wouldn't get too aggressive onto that, into the Aussie ahead of the RBA announcement, because we know what we're expecting, 0.15 rate rise, but doesn't mean too much. Are they going to talk up being more aggressive? If they're going to talk up being more aggressive, you might find that the Aussie dollar, if it's going to talk up being aggressive, technically you would expect buying into the Aussie dollar. Okay, but don't be surprised if we get a massive flush and then bounce back later on. Okay, because that's the market will tend to do the opposite of what the consensus is as they drive it around. Just try to trigger stops, trigger retail off before they start to work their way higher. Okay, US yen. I've just put this mark up here. That's your line in the sand for intervention from the BOJ at 130. We spoke about this a few days now. Let's just get rid of that there. We've got not really a level. Look, it's powered up. We've had this, if we look right back, we've had this good, strong move up. Now that got broken and we ramped straight back up again as the US dollar continued to get bought up. Okay, so they're just testing, the bigger boys, or you get your insto are testing the resolve at that 130 level, because the first line of defense is just talk. With any Fed reserve, they just talk it up, talk it up, talk it up, to try to scare some traders out of the market. So essentially scaring some short sellers into the yen, okay, out of the market. So just trying to squeeze out, if they squeeze out some short sellers, that should, the currency should sell off. Problem is the US dollar is still strong. It's still hovering around that level, and I wouldn't expect too much to happen into the US yen ahead of, if you're not going to expect the US dollar to sell off, you wouldn't expect too much action into the US yen ahead of the FOMC. So the thing is, it's one of those things, everyone's expecting some sort of intervention from the BOJ. Okay, but until they do it, until you see a good setup, good strong setup, you're going to get traps laid. Like, this is a trap. Bring in some sellers, squeeze them straight back out again. Could do the same thing. Bring in some sellers, start to break down, because that would have been, everyone is looking at that trend line there, selling off before, and everyone's initiating some shorts, thinking this is your lower high, this is your sell. Bang, we get squeezed straight back out. And I'm guessing if you're looking at level like that, that probably worked out quite well into these lows. So that extension level just through before it got all squeezed out again. So they're just, until something happens, that's going to be the reaction move. Until that happens, it's continued to be sort of bought up, because nothing's happening with the US dollar. Okay, to trigger. So if the US dollar has a big sell-off, we might get some a bit of a squeeze on some yen shorts and a bit of a rollover. All right, we'll look at gold now. Gold took a beating, and we've been speaking about this for quite a while. If we just go to the daily, just as a reminder, that's the move down. So this sort of push up into the highs, failed around to 20.75. This sort of pop up here on the daily. Got the move down, another tried to attempted rally. Now everyone's been talking up inflation hedge, and they've been talking up that for a while. Now, if it does go, I guarantee you they'll all be saying I was right. Problem is they sat through all this sell-off, so that's not right. That's just wrong, if you ask me. So you've got to trade what you see, not what you think. Not expect it's an inflation hedge and you're just buying randomly, because you're going to get squeezed out, and they will try to squeeze you out. It may be that it's going to be an inflation hedge, but only when they start to raise rates. Okay, and it may be that that's going to be the case, but I don't expect a massive rate rising cycle, or for rate rising to get out of hand and to really drive this to gold higher. But it might faint a bit. So this is kind of your longer term trend up. It could be just reversion to the mean. We might be looking back to sort of this zone in here, and that's somewhere around 1845, 1850 thereabouts. We might still get selling off, but that's kind of what I'm expecting. It's in a downtrend, especially on the daily. It is extended. If you go back to the 30-minute chart, it is getting a little bit extended. We might need to chop around here, but there's no reason why this just can't keep holding these lower highs, pressure through this level here, 1859, and sell further off tonight, tomorrow, sell off further, because it's got a couple of days until we get FOMC, until we know a bit more, until what they're going to do with interest rates and inflation. Okay, so I'm basically biased down on gold. I wouldn't be buying that. You really just you're guessing. If you're trying to buy that, you're guessing, and you're guessing, and if you're guessing because of inflation hedge or something like that, and you're being wrong time and time again. Okay, so just wait till it starts to set up if you really do like gold. Oil now, because of those Chinese numbers, oil found a bit of a bid and it rallied. It rallied off this 99.90 level. You see 99 even, 91, 100 even. That's what I'm looking for. It rallied off that zone here, which is some support we've been speaking about. We're on the 30-minute chart here. Yep. So we rallied up, pushed back down, retested it, and back up to 105.15. So it'll be interesting to see whether we sort of fluff around this level and start to roll over again, and we get a secondary leg lower. That would be nice if you're looking at fuel prices. So that would be good if that starts to play out. If we start to work our way lower and start to work our way through that 100 even, potentially back down to 93, 93. Okay, but what we've been speaking about is the longer term. Let's get that a bit clear. That's your longer term move down, contractive move down. We've got major support held at 93, 93. We've got a higher low that's potentially coming into play. So this could be the start of one to a good leg up again and potentially take us back up to this zone, okay, 114 or so, which is not going to be so great. Lucky I filled up my car. All right, so that's oil. It is, like I said, finding a bid because of worries about China and less demand coming from China, and then you've got obviously what's happening in Ukraine, all these sorts of issues. It's weighing on demand, okay, or supply, sorry, and we just got to throw in that demand from China, those issues there that could be pressuring prices higher. Copper, we finished off here, got knocked down, so this is that move down, daily move down, bounce back up, consolidation. You're looking for that at that stage. We're either looking for that to be a higher low and pressure up, or a lower high, which turned out to be a lower high. So you got your secondary leg down. Basically, it's played out last night with a bit extra, flush through that 4.2945 area, and we're bouncing back. So whether we bounce back hard enough and then retest, or we're going to hold that low and go back down tonight. Okay, that's kind of what I'll be looking for, something like that. But I think with everything that's happening, rate rising cycle, demand is coming out of, or demand is coming out of copper, because it had a massive run up. If you look at, say, longer term, just look at that weekly. It's had a big run up, and we're up at these weekly highs. Okay, so don't be surprised if we start to head lower a bit more. And that could just be a big flush, that sort of move up through these highs, big flush before we had a bigger correction of this move up. Okay, so we get over to the last two. We just look at Bitcoin and Ethereum. There's not much happening there. Bitcoin's stuck between 39,150 and 37,700. Now, I'd expect it to sort of flush into these levels, but I think it's going to wait until we might just chop around here. I wouldn't expect it to get up through 39,150, but I wouldn't be surprised either. Okay, if the US has a bit of a bounce tonight, that'll drag it up and through. Okay, and if you look at Ethereum, it probably makes a bit more sense. We had a nice reaction off that 27.73. We pushed up to the 28.67. Now that looks more likely that level is going to hold. We're going to start to squeeze out some of these sellers on a bit of a move up, but it can also just sort of pop and then flush lower. I think it's going to wait until the US is open, really, is what I'm looking for. I wouldn't be looking to get involved in that. I think it's too heavily linked at the moment to US indices, to share prices and stuff. So, well, that's it for me, guys. I think that we'll wrap it up there. Thank you very much for joining me. If you like what you hear, it'd be great if you can jump on a YouTube site and take a look around, subscribe if you want, and leave us a like. It'd be much appreciated if you want to have a look around. Take a look at the website also, www.traderstructure.com. A lot of free material, free subscription, and jump on our Discord channel. All the details are on there. All right, guys, we'll speak to you soon. Bye.